Results revenue at 3.17 billion euros, up 4.2% year over year.
Reporting third quarter sales up 4.8%. Franklin Golf Romeo.
The Fed policy will be driven by the pace of the data. Same policy will remain accommodative.
Futures off session low, still down about 1% on the day for a little more than 4 pennies.
To Brentwood, Tennessee. So I took some time off, but when I reconnected with the options world, I reconnected with Charlie and the group of folks that I'm now working with, and that was in September. So really it's been the last 3 to 4 months that we've been hard at work, not only testing, but trying out different things. So that's how this has all kind of come together. And again, everyone in this group has contributed, not just me. I want folks to know there's an army of people out there that make this all happen. I wish I could say it was all of mine. All right, so let's talk a little bit about weekly versus monthly options. And what I want to cover today is the differences in how they work in terms of market demand and at-the-money price volatility, at-the-money and out-of-the-money decay, and this whole list of things, and I repeat them all. So if you look at the first one, market demand and at-the-money price volatility. In monthly options, market demand plays a role in driving option prices, but the longer days to expiration buffers that effect. So at-the-money prices, while volatile in monthlies, are not nearly as volatile as the weeklies. When you get to the weeklies, market demand is everything. It is the primary driver, even trumping time, and so at-the-money volatility tends to be very significant. And so in the monthly, price movements in the underlying can affect the at-the-money price. Market news can affect the at-the-money price. But again, that effect is buffered because you might have 15 days, 30 days, 25 days till expiration.
Right.
That effect, that at-the-money volatility is exaggerated in monthlies, especially in the last few days they become highly volatile. The other thing is that in monthlies, most of the time you're exiting prior to expiration week. So you don't get to experience that volatility. Well, in a weekly, you are on during that time of highest volatility. So you've got to kind of know that going into the monthly world.
Right.
Now, if you look at the money and out of the money option premium decay, in monthlies, you have a reasonable expectation that Black-Scholes index, these pricing models, they give you a reasonably accurate prediction of how premium decay will occur over time.
Right.
Now, in weeklies, because market demand is the primary driver, those pricing models don't work anymore. They're not accurate predictors of when decay is going to happen. It's really market demand, volatility, and who's buying what that determines at the money and out of the money pricing structure. So if you're relying on those models to look at what's happening with your trade, you're going to get creamed. The other thing is that in monthlies, because you've got time, decay kind of goes in a linear fashion, right? It comes out a bit each day, market moves affect it, but you can depend on that data coming out in a very linear way.
Right.
Well, in a weekly, that decay is very unpredictable. And in fact, at-the-money decay may not happen until very late in the trade, while out-of-the-money decay could happen quicker, meaning that you might have a long option that was meant to protect you, but it ends up decaying very rapidly when at-the-money is not decayed at all. So you may have less protection than you really think and have more significant risk on the table than you realize.
I see.
So if we talk about time now, the impact of eroding time, on monthlies you're entering positions 15 days, 30 days, 45, sometimes even 70 days out. So time has a more passive effect on the position. In weeklies, interestingly enough, time can have virtually no effect for the first couple of days in moderate and high volatility environments. You would think that if I have only 8 days till expiration when the weeklies first come out, that every day has to have a significant effect on my decay, but it doesn't. You may go from Friday to Monday and lose 40% of the days remaining in a weekly's expiration and have no decay whatsoever. So you have to understand that time is not necessarily a factor. Now, at the very end of the trade, Wednesday, Thursday, time is starting to put its influence because we all know that out-of-the-money options are going to zero,
Right.
once expiration comes. So time is more of an influence very late in the trade. The other thing about time that's interesting, in monthlies, your timing of entry and even sometimes adjustments is not as critical as it is in weeklies. Because you've got 30 days to make your money, if I choose day 29 or day 31, probably isn't going to have a material difference to my results. Now, of course, if there's giant 3 standard deviation moves the day before, that's going to impact it. But in weeklies, interestingly enough, your entry timing in particular is very important because since the options are fairly volatile, you don't want to necessarily be in the market during a time where you're exposed to that volatility, but you're not getting any payback for it in terms of decay. So entry timing becomes a critical piece of how you put your strategy together. So Greeks, theories, and T+0 lines. You know, in monthlies, again, the pricing models are reasonably accurate. The Greeks are reasonably accurate. They provide a good feedback on how your position is going to look if certain things happen. Your T+0 graphing tools give you a reasonably good look of what's going to happen if the underlying goes up 10 points tomorrow. Well, since the pricing models really aren't accurate, the Greeks don't provide a real good picture, and T+0 lines can fool you in a weekly.
Thank you for watching this clip of our Options Tribe webinar. The rest of the recording is available on OptionsTribe.com. I'm Seth Freudberg, and I've been hosting the Options Tribe since May of 2011. We've brought in options experts from all over the world to make excellent presentations to our members. So go right now to OptionsTribe.com to learn more about options education, or you can send me an email at sfreudberg@smbcap.com.